mortgage that would make housing more affordable. And it comes just days after the administration also proposed the possibility of a 50-year mortgage. Joining us live to talk about all of these things is the loan arranger himself, Bruce Woodburn. Good to see you, Bruce. How are you?
Good to see you, Amy. Doing great.
Good. So let's talk first about this 50-year mortgage idea, right? You know, people are locked into certain things. Maybe it's a 10-year, maybe it's a 15. Most people on a 30-year mortgage probably. 50 years seems a little wild. What are your thoughts on that?
Well, think about this, Amy. 50 years ago was 1975. What were the price of houses in 1975? What were the price of goods in 1975? And if you think about it, the lowest interest rate on a mortgage is going to be a 15-year, then a 20, then a 30. Now we're going to add another 20 years to that. So we really think that there's a likelihood that a 50-year mortgage is going to be a little bit of a higher rate. Matter of fact, considerably, about a half a point. And when you take a mortgage, say a $400,000 average mortgage, we're only saving about $136 a month. So I don't know if it's really going to make the difference. If $136 a month is making the difference of whether you getting into a home or not getting into a home, it might be the right thing for you. But I would be very cautious on adding, doing a mortgage for 600 months. That's a long time.
Yeah, no kidding. I mean, most people would be happy to survive, whatever that year is that they buy the house, say they're 30 years old, if you add a 50-year mortgage, my goodness, right? I mean, I don't know how many people would be able to ever pay that off.
Well, and most people don't anyway. They only have their mortgage for, on an average, 5 to 7 years, and then they're either refinancing it or they are buying a new home. Now, take that into consideration. So now we've got portability. People want to port their mortgage because they're stuck in the golden handcuffs because they've got a 3% interest rate on their current home and they don't want to move up to the next home and pay 6.5%. And that makes sense. Affordability is our number one issue in the housing market, and the housing market affects all of us in some way or another. So portability has been talked about for a while. I like the idea that the Trump administration is looking for ways to combat affordability. On the other hand, we look at portability. You have to remember that your mortgage is actually tied to your home. It's not tied to you. It doesn't have anything to do with you other than you having the ability to repay that mortgage. So that mortgage is securitized by that property in order to port mortgages that already exist. And nobody's going to want to port a 6.5% mortgage. You're going to want to port a 3.5% mortgage. So that mortgage would have to be rewritten entirely in order for that to happen. So it sounds good, but when it comes to mortgage-backed securities, which are what mortgages are tied to, it doesn't make a lot of sense. If I gave you a CD at 3.5% now, and now you had an opportunity in today's market to get 12%, you'd want that 12%. Banks want to recoup their money. They've got to recoup that money in order to lend more money out. And if it's just following people along, that loan would never pay off.
So, Bruce, one of the things that that people won't pick up and leave a house right now is because they've got this great rate, right? And so they're like, I would love to pick up and move, but I'm not going to go somewhere and double my rate. I mean, so what do? Do they just wait and hope the rates come down? Do you think we'll get that December rate cut?
I honestly, that's really up in the air right now. We thought we were going to have a Fed cut. And if you remember, we were expecting not only a quarter cut on October 29th that we got, but we were expecting the December 10th quarter point cut. And when Chairman Powell announced that that was a foregone conclusion and there was no guarantee that that was going to happen, they are more concerned about inflation, and inflation will erode the economy. So they're more concerned about inflation than they are about dropping the interest rate. They think it could do more damage. So a lot of the experts are now pulling back on thinking that we're going to hit those 5.5% rates by, the end of the first quarter or the beginning of the second quarter of next year. Now it's not quite sure that that's going to happen. However, Fannie Mae did announce some good news. They got rid of the the credit score of 620. So there's no longer a floor of 620. So that's going to help some borrowers that may have been sitting on the fence with credit scores on a conventional loan. Keeping in mind that FHA and VA still are more flexible on credit, but Fannie Mae did relax the rules a little bit, and that starts today.
Okay. All right. Well, it's a fascinating conversation. I wish we had more time with you, but really good info for our viewers this morning. Bruce Woodburn, always a pleasure, my friend, and thank you.
Yep. Say hi to